Hey guys, welcome back to the course. Until now, we have mainly focused on how the market works. From this video onwards, we are actually going to start reading the charts. And the first thing we need to understand is the candlestick. Yeah, probably already seen you have seen these green and red candles on the chart. But instead of just looking at the color, we need to understand what happens inside each candle. So let's begin. Okay. We can be here only. Yeah. Okay. Welcome to the module 2. This will be candlestick language. I'm calling it a language because every candle is giving us some information. It can show us whether buyers were strong, whether sellers were stronger, whether price was rejected from an area or a region, or whether neither side has proper control. But one important point before we continue: one candle alone cannot tell us everything. For example, a strong green candle may look bullish, but if it forms directly below a major resistance, we still shouldn't immediately buy. So, we are going to learn two things. First, how to read the candle itself, and later, how to read that candle based on where it forms on the chart. So, let's start with the four prices inside a candle. Yeah, open, high, close, and low. So every candle contains four prices: open, high, low, and close. You may have seen this written as OHLC. Okay. So the open is the price where the candle started here. Now remember, this depends on the time frame. Now I'm looking at 5 minutes chart. Uh, the open is the price at the beginning of those 5 minutes. If I'm looking at a daily chart, the open is the price where the trading day begin. So yeah, the high is the highest price reached during the period, and the low is the lowest price reached during the period. Finally, the close is where price finished where the candle ended. The close is very important because it tells us where buyers and sellers finally settled at the end of the period. Let's use a simple example. Imagine a 5 candle opens at 100 rupees. During those 5 minutes, buyers push prices up to 106. Let's hope. This is just an example, okay? Then sellers enter and push it down to 98. Before the 5 minutes finish, price recovers and closes at 104. So in this example, the open is 100, the high is 106, the low is 98, and the close is 104. The area between the open and close forms the candle's body. Yeah, sorry, candle's body. These lines which you see are called wicks. The upper wick shows how far the price has traveled above the body, and the lower wick shows how far price has traveled below the body. But don't make the mistake of looking at one candle and creating an entire trade from it. A candle is only a summary of what happened during one selected period. To understand its real meaning, we also need to check the price previous candles, the market direction, and the location where it formed. We'll keep building the context as we continue. So now let's understand bullish and bearish candles. This part is quite simple, and most of them actually know it already. A bullish candle closes above its opening price. For example, if the candle opens at 100 and closes at 105, it is bullish. On most platforms, bullish candles are shown in green. A bearish candle closes below its opening price. So, if the candle opens at 100 and closes at 95, it's bearish. These candles are normally shown in red. But the color alone isn't enough. We should also look at the candle size and where it closes. A large bullish body means buyers may made good progress during the period. It doesn't automatically mean we should buy, but if it shows that buyers were active, in the same way, a large bearish body shows that sellers made strong progress during that period. Now imagine we have a bullish candle with large upper wick and price moved up strongly, but it couldn't remain near the high. Before the candle closed, sellers pushed it back down. So yes, the candle may still be green, but the upper wick tells us that sellers reached at the higher price. And the opposite can happen with bearish candles. A red candle may have, like open a longer wick, lower wick, which tells us that price moved down, but buyers reacted and pushed it back before the candle closed. And this is why we read the body, the wick and the closing position together. And don't just think green means buy and red means sell. If trading was that easy, everyone would be profitable. Next, let's just move on. Yeah, body wick and range. Now let's examine the candle more closely. A candle has three main things we should observe: the body, the wick, and the total range. The body shows the distance between the opening price and the closing price, as you know. A large body means price made stronger progress in one direction during the period. A small body means the open and close were closed together. That can show hesitation or temporary balance between buyers and sellers. The upper wick shows the area price explored above the body. If the upper wick is long, price moved higher but couldn't hold the entire move. The lower wick shows that the area price explored below the body. A long lower wick means price moved down but it recovered before the candle closed. The complete distance from the candle's high to its low is called the range. Okay, sorry. A wide range tells us that price covered a large distance during the period, and a narrow range tells us that price didn't, move very far. Now, how do we decide whether a candle is large or small? We compare it with the candles around it. A 20-point candle may be large on a chart but completely normal on another chart. So there is no fixed number that makes a candle large. Always compare it with the recent candles. For example, suppose previous 10 candles are all small. Then suddenly one large bullish candle appears and closes near its high. That shows a clear change in activity. Buyers became much more aggressive during that period. But if every candle on the chart is, already large, the same candle may not be special. So the meaning is always relative to what happened before it. The rule for this video is simple. Don't read only the candles colors. Read its bodies, its wicks, its total range, and most importantly, where it closes. Yeah, before we finish, open a chart and choose 5 candles. For each candle, ask yourself, where did it open, where did it close, which side has the longer wick, did buyers and sellers make more progress, and is this candle large or small compared with the nearby candles. You don't need to take any trades, just practice describing what happens inside each candles. Wait, I'll also show you, like in trading view. I'll show you a simpler way where you can see open, close, high, this, that, everything. So yeah, let's choose this big one candle. So what? Here in the top one, you can see O means open. This is high, this is low, and this is close. So you can see all the prices. what I'm saying is, without this, try to mark like, you can mark like this and you see the price. So this is just a practice kind of way that you can use for improving. So that's it for this video. We learned the four prices inside a candle: open, high, low, and close. We also understood the difference between bullish and bearish candles, and how the body, wicks, and ranges helps us read the activity between buyers and sellers. In the next video, we'll continue with candlestick languages and look at how different candle shapes can show momentum, rejection, and indecision. Practice with a few candles on real chart. You don't need to buy TradingView Premium for now. I'll see you in the next video. Thanks for watching.